Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I want to start by showing you some interesting fractals. I was playing around with both the VIX chart and the SPY, and I wanted to show you something that is potentially quite scary. So let's get into this. First of all, I've got the VIX chart here. I'm going to scroll back to 2008, and I'm going to grab my bars tool and copy and paste this bit, and then fit it to the right hand side of the chart where we are today. And so take a look at this. This is the VIX fractal from 2008 during the financial crisis. This higher portion up here corresponds to when the markets finally found their lows before ending the bear market going forward from here. So you can see if we overlay this where we are today, it's a lot of similarities. This actually fits surprisingly well. We have the peak of fear, peak of fear, peak of fear, long drawn out volatility compaction. We go up one last time into around the end of October, as you can see, before pulling back and then actually exploding into that last capitulative moment. So I think this fractal fits surprisingly well to where we are today, particularly from here on. We'll see how this goes, but if you've been watching the channel, you'll know I've been going on about a pivot this whole time, and I think it's important to make sure that we don't have a bias. We can have an expectation, that is my expectation, but it's important to understand the context, it's important to understand the bigger picture, and it's important to understand both sides of the argument. What if the Fed is hell-bent on blowing up markets? Well, if it is, then this is what's likely to play out. So we'll move over to a clean SPY chart. Here we go. And we're going to repeat this process. We're going to go back to 2008 and grab the fractal from back there. And so you can see right here, we have got a similar situation where the current market structure overlays surprisingly closely to that of the 2008 financial crisis. Something that is concerning at the moment is if we do not hold these lows, if these end up not being the lows, then this opens up the rest of this fractal playing out and significant downside from here. Right now, will it end up being all the way down to a sub 2000 S&P? I don't know. But the fractal is suggesting that if we take out these lows, then it could well be another 50% down. With this fractal here, you can see that this low would line up right around the time of that October for the VIX. You can see here, that's exactly where you'd expect the peak fear to come, towards this middle of October, right? So around the 14th, and then we go back to the SPY and we get a date around the 14th for the low. So this is all lining up. Of course, the VIX and the S&P are inversely correlated. Something else I want to point out is that if we do happen to lose these lows, there is a massive megaphone structure, and the technicals never lie. If I take these lows here and extend out this big megaphone structure, connecting these lows to these lows to these lows, let's zoom in on these just so you can see that we do have touches, right? Touches from the close, touch from the wick. We wicked below it, used it as support here, and then went in the C19 plunge. We found support once, twice, wicked below, and then recovered. So you can see that we've got this enormous broadening wedge. We broke out to the top of it, fell back in, retested. Look, perfect retest, flipping support into resistance before potentially starting an enormous decline where we would find support once, then violate it as we always like to in true bottoms, and then go. So is this on the table? Yeah, this is on the table. This is what's going to happen if the Fed decides to blow up markets. Now, is the Fed there? Nobody really knows yet, right? But this is certainly on the cards. This isn't my primary thesis, but there's nothing worse than having your primary thesis tested as a trader, and it appears that my primary thesis is being tested at this moment in time. So we do have to be open to both sides so that we're not dogmatic and don't get caught waiting for new highs while something like this potentially unfolds. So where do you know? How do you know if this is on the table? Well, we lose these lows down here, then the probability, the path of least resistance is down. We lose these lows from back here in June, and downside, enormous downside, is definitely on the table, becomes the most likely outcome in this scenario. So these lows have to hold, otherwise another 50% drop is potentially 55% from those lows is on the table, and from today's price or Friday's close, that would be a 60% decline. So if you're holding for the long term, something to be aware of, right? If the lows are violated, then lightening up significantly is certainly a good idea. Fractals are fractals, and I've shown before on this channel that for every bearish fractal like this one, there's also a bullish one where this ends up being the low and we go on to make a pullback, hold the lows, and then make new highs. So there is that chance as well, but you can't deny that this fractal is lining up very well. The VIX fractal also lines up incredibly well, as you can see, with the absolute peak of the VIX. If this fractal was to play out exactly, which they never do, would come around the 1st of February 2023. Moving back to the SPY, the peak of the volatility, the peak of the VIX, coming right around the 15th of February as well. So this low would align with the peak of the VIX, but in the case of this fractal repeating exactly, we would then get one further low into May of next year. So this would be an incredibly long and drawn out process, as you can see, meaning we're actually only around a third of the way there in terms of time. I don't think anyone is really expecting this either, and trend lines are trend lines. You know, technical support and resistance is technical support and resistance. It works, and this is what is quite concerning to me, that I actually drew this, not on this account, on another account I've got, I drew this megaphone a long time ago. I drew this wedge a very long time ago, and at first I thought that possibly we would get rejected off here and then make our way down, but then once we broke out of it, I kind of put this thesis to the back of my mind, and it was only today that I suddenly realized when I was playing with the fractals, oh no, I bet this touches the megaphone, and of course it does, right here. It is something we all have to be open to. What does this look like for Bitcoin and crypto? If this is to unfold, then what does that look like for Bitcoin? Nobody really knows, because Bitcoin has never really seen this sort of thing, okay? Bitcoin was born out of this. I would say there are two paths that Bitcoin could take. Bitcoin could continue to be correlated to the equity markets, in which case how low Bitcoin ends up going if something like this is to play out and it stays correlated to the stock market is anybody's guess, but I would think sickeningly low numbers would be on the table for Bitcoin. However, if the market can work out what Bitcoin really is and can work out that there's no rhyme or reason for it to be correlated to risk assets, if the market can work out that Bitcoin is much more suitable to hold than stocks during a financial crisis, if people start to work out that Bitcoin is much more akin to gold than it is to equities, then perhaps we can see a great decoupling. Perhaps we can see Bitcoin go on to do Bitcoin things. I would think this works as a self-fulfilling prophecy for Bitcoin. So the more Bitcoin shows that it's uncorrelated to risk assets and equities, the more it shows that it's more like a digital gold than it is a risk asset or a tech stock, the more people would flee to Bitcoin as a flight to safety. The more people would think of Bitcoin as a safe haven asset, particularly if we have extended periods of inflation and people start to realize the value of having a monetary asset, a hard currency that cannot be inflated, where the supply cannot be changed. It is set in stone forever and nothing can ever change that. If something like this was to unfold, this would be the ultimate test for Bitcoin. Because if Bitcoin was to follow this fractal along with the equities, assuming that this is what plays out, I would argue that Bitcoin has failed. And I say that with hesitancy, and I say that with pain in my heart, because I really, really want Bitcoin to succeed. But if Bitcoin cannot rise from the ashes of a collapsing financial system, if Bitcoin cannot turn into the digital gold, the hardest form of currency on the planet, like it was designed to do, if Bitcoin, which was created out of a financial crisis, right, out of this very fractal here, came Bitcoin. And if it cannot live up to its design purpose, which was to be a no-nonsense, hard form of currency that nobody can mess with, that nobody can censor, that is permissionless, immutable, and most importantly, deflationary over time. If Bitcoin is sadly to fall apart during one of these crises, assuming that this is what plays out, then I don't really see how it recovers from that, personally. So we are living in wild times. Bitcoin is, I think, most probably going to do Bitcoin things. The smartest people in the room understand Bitcoin. They've always understood Bitcoin. The smartest people in the room are going to treat Bitcoin like digital gold rather than a risk asset. But it certainly looks like Bitcoin's final boss is coming up. If we get one of these fractals play out and Bitcoin follows it exactly, then I don't really see the argument for it ever coming back. But as I've said already, Bitcoin was designed for this. This is exactly Bitcoin came out of this. Bitcoin has done Bitcoin things out of this. Bitcoin continues to do Bitcoin things. Adoption continues to grow and snowball. The network grows and gets more secure every day. Layer 2s like Lightning has made Bitcoin usable, scalable, faster than its debit and credit card competitors. If I could only choose one asset to hold during this fractal, I would choose Bitcoin. So it all comes down to these CPI prints. Do we get a downside shock in CPI, or do we get a hot print? Do we get something that sets us up for a dovish pivot, or do we get continued destruction? Game of Trades has pointed out that bottom for stocks has been called by peak inflation right at this moment in time. So currently we have had peak inflation, which has corresponded to a bottom in stocks. So let's watch to see if this continues to play out. Of course, if we continue to get CPI and inflation come off, then it's likely that these lows will hold and that we won't be doing one of these fractals. However, we get another hot print, and I think that opens the trap door for this. I got this here from Schiff, and I thought this was a very good summary in just 4 tweets, so I'm going to read this to you now. He says, the interest rate hikes today sow the seeds of higher inflation tomorrow. When the Fed raises interest rates, it increases its debt service costs for its consumers, businesses, and the government. Burdened with higher interest costs, consumers have to spend less on goods and services. Businesses are therefore forced to raise prices and lay off workers and offset both the higher interest costs and the lower sales. The fall in real consumer spending and rise in interest rates and unemployment not only result in a recession, but in larger budget deficits. Tax revenues fall and expenditures rise due to both automatic stabilizers and higher interest costs to service the national debt. The government then compounds the problem with additional spending to stimulate the economy. This makes budget deficits even larger, crowding out private investment, putting more downside pressure on the economy and upward pressure on consumer prices. To mitigate the damage, the Fed accommodates larger deficits by monetizing them, quantitative easing, i.e. it creates even more inflation. Expansive fiscal policy undermines restrictive monetary policy. So you can see we have this cycle, this mechanical cycle. And so if you think about this economic cycle and where we are today, we are somewhere around here, right? We're about to see the unemployment spike. We are certainly in a recession already. Tax revenues are falling for sure. So expenditures are rising due to both automatic stabilizers and higher interest rate costs. We are seeing the government start to compound this problem at the moment with additional spending to stimulate the economy. We're already starting to see this with things like the Inflation Reduction Act. The budget deficit is going to continue to grow larger. This is going to continue to put more downward pressure on the economy and more upward pressure on consumer prices. And eventually, the Fed is going to have to try to mitigate the damage by moving back to QE, which is going to lead to even more inflation. Once we get to this stage of even more inflation, what do you hold? Gold, silver, and Bitcoin. What else is there? What else is there? So I'm going to leave you with this clip from Senator Loomis. She is telling us to buy Bitcoin and hold it for retirement. It's Bank Holiday Monday here in the UK, so I'm going to take the rest of the day off, and I'll be back tomorrow with more of the usual content from the channel. I hope this video has given you some situational awareness. I hope that you understand that I am not dogmatic in my approach to this pivot, and I am open to being wrong, although my primary thesis is, of course, that we will see a pivot. However, I have no crystal ball, I have no idea what's going to happen, and I am open to playing both sides of the market. There's going to be some trades coming up over the next week or two, so if you want to see those and how I deal with those in real time, make sure you subscribe to the channel. And in the meantime, take care, look after yourselves, cheers, bye.
I encourage people to buy and hold. I encourage them to say Bitcoin for their retirement, for their future. And that's because as the Congress spends trillions and trillions of dollars and is flooding our economy and the world economy with US dollars, there's no way that we cannot debase the value of the US dollars.
And Loomis practices what she preaches. She's an investor in Bitcoin as well.
I buy Bitcoin and I hold Bitcoin.
You buy Bitcoin?
Oh, yes.
You have Bitcoin?
I do.
How much Bitcoin do you have?
Well, I only have, I think, 5 Bitcoin.
So only 5 Bitcoin, but she bought them in 2013 for about $300 each. So she can now add a couple of zeros to that number.